Good morning, everyone, and welcome to today's session. My name is Marilyn Ramplin. For those of you I haven't met before, I'm the CEO of Novia One, and today's a really, really special day for us. We have the privilege of hearing from two renowned thought leaders who really have driven innovation, transformation, and strategic growth across global industries. And Douglas and Stefan, their expertise in financial services, in digital evolution, and business transformation has really shaped some of the world's most influential organizations. And we have the privilege today and the pleasure of spending time with both of them. So thank you very much, gentlemen, for being here today. So our two guests, Stefan and Douglas. Stefan Diefenbacher is a global thought leader in innovation and transformation. And Stefan has worked with industry giants like Amazon, BMW, UBS, Deutsche Telekom, and Google. That's quite impressive, right? And so as the founder of Digital Leadership, Stefan has spearheaded major transformation initiatives. He has co-founded 9 startups, and he's the best-selling author and sought-after lecturer at Stanford University, at NYU Stern, and St. Gallen. And with a passion for accelerating business innovation, which I know we will see some of that today, Stefan has really helped organizations to design future-proof strategies, really looking at how do we embrace digital disruption, and most of all, how do we build scalable, high-impact solutions? We've all been part of transformation initiatives in various organizations. We've seen what can go wrong, and hopefully today we'll look at how we can unpack that. And with Stefan's expertise in business model engineering, in AI, which is the new buzzword at the moment, and the strategic growth frameworks, it has all really made him a trusted advisor to senior executives, board members, and to policymakers worldwide. So, Stefan, we are really, really honored to have you join us today. With Stefan today is Douglas Lyons. Douglas is a financial services powerhouse. Douglas has a proven track record of growing and transforming businesses, and has managed $10 billion plus portfolios across corporate and investment banking, retail banking, and risk management. And with over 25 years of strategic leadership, he really has successfully driven disruptive innovation in financial services businesses, helped institutions to adapt to digital transformation and to manage the evolving market demands. And actually, Douglas, today, I want to take this opportunity to personally thank you for changing my life. One standout innovation from Douglas's portfolio is the Carry app from Nedbank. It really is a game changer for parents with school-going children. And I mean, many of us have been there, and we know the frustration of rushing out the door only to have one of our kids remind us at the last minute, oh, Mom, it is slip a day today and I have a fundraiser. And, the chaos that ensues, when we try and scramble to find some loose change. And, Douglas has solved that problem. And this is what the session is about. It's about looking at what are those problems that we really need to solve as well. And for me, the Carry app is such an amazing example of a simple, secure, cashless payment solutions for schools, making my life easier, making the lives of parents and teachers easier. And Douglas, I've got to tell you, when I told my daughter this morning, I'm doing a webinar with the man responsible for the Carry app, she was super impressed, because that app now has a card linked to it, and we all know what that means. So, for me, the session is really special. And so why does it matter? I think it really matters when we think about the exponential advancements in AI and digital banking and financial transformation that all of our organizations are struggling with, as well as our delegates on the webinar today. And it's really about adapt or be left behind. We've heard that so many times, and often we've all tried to do it. And I think this webinar for me is really designed to provide practical, high-impact strategies that will try and help us to navigate the disruption, to enhance the agility, and really to look for ways to create that long-term competitive advantage. So for me as a business owner, I'm super excited about the session because, it is one thing to have great ideas, but how do we navigate the cultural and the operational challenges that often holds businesses back to be able to implement that as well? And, finding the right balance between short-term wins and transformation and long-term innovation, it's a real struggle when we try and think about how do we create value in this digital age. So, Stefan and Douglas, I'm really happy that you were able to make time in your really busy diaries to be able to help us answer and unpack some of these questions. And as ever, to all our delegates on the webinar, this is your session as well, so feel free to ask questions. Pop them in the chat. We're going to have specific sessions throughout the session where we are going to have opportunities for questions, and we'll try and deal with them. But pop them in the chat if you don't want to raise your hand and ask a question, but be wonderful during the question sessions. We are not leaving them all to the end, which is wonderful, where you'll get an opportunity to be able to ask those questions. So enough from me. Gentlemen, over to you.
Fantastic, Marilyn. And first of all, thank you for that wonderful introduction. It is an absolute privilege, and I'm sure that I speak on behalf of Stefan as well, to be with yourselves and your team today and all the audience. South Africa is an amazing country. It's my home country, and I just think there's such opportunity. And I think for us, Stefan and I are joined with one core value system, is that we want to give back to the world. We want the world to be a better place. And so that joined us many years ago when we formed a wonderful friendship. And so we look forward to sharing a bit of our journey today, and hopefully share some of our experiences. So we're gonna have some fun. It's going to be a bit of speed dating on PowerPoint, but we'll do it in a fun way. And as you rightfully said, we've got some intermittent Q&A. So please do feel free for the audience to ask questions along the way. We will have some breaks. Stefan, I know you're going to bring up the presentation, and I'm going to start off and just talk about what we're going to cover today. Clearly, the changing context. Now, this was done before last Friday's blow up in the Fight House. I won't call it the White House. Here they call it the Fight House. And certainly things have been quite radical since then. So I'm going to talk briefly about that. Stefan's going to be talking about fundamental concepts around our 3 horizon and growth thinking, and of course the importance of strategy execution. I'll be spending some time with you on business model engineering and innovation, and then Stefan will be finishing off with innovation success, which is some really amazing things in his experience that he'll be sharing with us there. So that's really it, and of course please feel free to add comments and thoughts, reflections in the chat room. So moving on to changing context. Clearly, as I said, I think up to last Friday, we thought we understood the world, and the world is dramatically changing. And Stefan, you and I need to debate whether the average life cycle of S&P 500 companies is going from centuries to decades. Could it actually be years with some of the antics we see on global trade and tariffs and all kinds of industry things? But there's no doubt that we are seeing a world where there is significant change. And we have seen life expectancy of companies changing dramatically over this particular period. And I think the question is, why is that? Why do we see this longevity or the lack of longevity in business models? And a big thing is technology. Marilyn, you mentioned the issue of AI, and I can say now, in terms of investment here in London, AI is the number 1, fintech is the number 2. So we've seen a proliferation of excitement around emerging technologies. But what we've also seen is we've seen a proliferation of previous technologies, and the cost to entry, as illustrated in this particular slide, is getting cheaper and cheaper. And so for us, it's not just about single emerging technologies, more so it's about converging technologies. And so what we're seeing now is we're seeing the integration of sustainability, like solar powered factories, and take, for example, a automated robotics with IoT devices. We've seen programmable chips now allowing robots to be updated on a more regular basis. So it's this convergence that we've seen in some ways, I deal with this every day, but even I struggle to keep up with the rate of change. And I was recently looking at the Gartner hype cycle, and I noticed that AI is already on the downward slope on Gartner. And little do we know that quantum is around the corner, which is, by the way, 1,000 times more powerful than AI. So it is just an incredible rate. And this is affecting the way businesses operate, the way businesses invest. And so it is playing a fundamental shift in the way that businesses continue to either have longevity or not have longevity. So that's just one of the big impacts. Clearly, we've got geopolitical issues which are fairly substantive at the moment, and those will continue to be challenging. And lastly, I think with all these changes, the excitement, and I was with some bankers last night, is the excitement of opportunities has never been greater. And I think for me, when I look at South Africa as a country, and I look at the amazing things that you guys do in South Africa, there's so much opportunity, and it's to see the opportunities and not the negatives, and have the best set of tools to do that. So that's just a little bit about what we see as the big factors that are affecting longevity. So just moving on, Stefan. Over to you, Stefan, just to talk about some of the fundamental concepts.
Hey, all. Thank you so much for having me. So, why do most initiatives fail? And there is actually only three ways a company can evolve. Yeah? It can execute and improve in Horizon 1. Yeah? This is where you do digitalization. You can transform. A transformation is a step change to one part of a business model. We're going to talk further about that. And last but not least, you can innovate. Innovation is not some mere incremental improvement. Innovation, by definition, it comes from the Latin word innovare, to put something totally new in something, is actually radical in nature. And just we want to briefly contrast to you what this actually means in the way of thinking. And I'm sorry for the table, but you have to understand this. Therefore, let me briefly walk you through just contrasting Horizon 1, we are executing, incrementally improving, to Horizon 3, we are actually radically changing. So where does it happen? It happens inside the business in Horizon 1. We're exploiting current resource and capabilities, and the approach is typically one of execution, where we incrementally evolve, where we sustain. The business model, of course, and by definition, is known to us because it's our very own business model. Now, if we contrast that to Horizon 3, by definition, now we are outside of the business. Otherwise, something is very likely wrong to start with. And we are in the search to create new avenues of growth. We're in the search of a new business model, which is, by the way, the definition of a startup. A startup is in the often desperate search of a new business model. The changes it conducts are radical in nature. The strategic intent is one of innovation, versus in Horizon 1, the changes are incremental. The strategic intent is to reduce costs and increase profits. In Horizon 1, the core competency is an operational one. We are looking for stability and efficiency. Therefore, we need a culture of efficiency, low risks, and error prevention. I mean, imagine if the airplanes suddenly fall from the sky, or if banking transactions don't go through. So the expected risk we want to have is very low or very low. Yeah, Six Sigma type of thinking. The reward is equally low because we merely incrementally improve. The opposite is true for Horizon 3. Here, the core competency is an entrepreneurial one. We're looking for adaptability and breakthroughs. We need a culture of risk-taking, speed, and flexibility. So the total opposite of Horizon 1, the expected risk is high, or at least higher, depending on how well you do. The potential reward is also high. Investors are typically looking for more than 50% annual growth. This is just the way of thinking. Now, if you look at the way of executing, what it does is, regardless, as you shift from Horizon 1, executing, incrementally improving, to Horizon 2, making a step change to your business model, into Horizon 3, radically innovating, everything changes fundamentally. The leadership and team changes, the culture changes, your approach to marketing, technology, product management, risk, even procurement and finance, and certainly the KPIs you're after, everything changes fundamentally. Now, why are we discussing this? We're discussing this because the wrong setup is the number one reason why organizations fail with their digital transformation innovation efforts. Typically, we see organizations trying to go after transformative change or even innovation with very much the thinking, the leadership, the culture, the teams, the technology. Back to your office, think about have the right setup to have the right setup to.
Have we lost Stefan a bit?
Stefan,
Yeah.
the audio is
Yeah,
very
we
low.
got
So
the audio dropped, yes.
Better now?
no, it's
No.
low.
Can you hear me now?
Yes,
That's better.
perfect.
Yes, we can.
Yay.
Yay! So as you move to Horizon 2 and 3, everything changes radically. And as you go back to your offices tomorrow, think about whether you have the right setup in place to, in effect, be able to transform and innovate. This is, of course, just high level. Yeah. If you want to have more details, write to Douglas and I. We are happy to share with you how it really breaks down and affects each of those areas we pinpoint here. So here is a funny title, at least, how to take nearly all key strategic decisions. And let me introduce to you a second framework, which we believe to be absolutely quintessential. You can differentiate the capabilities and processes in an organization in three different areas. They are the non-core, the core, and the differentiating areas. An astounding 80% of all processes and capabilities in an enterprise or even in a startup are non-core. Non-core means they're not even industry specific. It doesn't matter how you do forecasting, HR, IT, typically even production. Most of that isn't industry specific. These are therefore the other activities in your business. And here you want to standardize, radically standardize actually, and cut costs. The core end areas, now these are industry specific, but you're not better than your competitors. So here you're battling head to head. These are the areas of your relative strengths. Here, the business objective is to increase competitiveness. An organization only differentiates with 2 to 5% of its capabilities and processes. These are the activities that really differentiate you. So here you want to do everything to drive value and differentiation, to build best and build capabilities. Here is where you actually want to be innovating to strengthen differentiation. This is the framework in a nutshell. Now let's go through a couple of examples and to see how it applies. And as the first one, like where do we cut costs in an economic downturn? And what we typically hear from CEOs is, let's cut costs across the board. Yeah, cut costs everywhere, 10 to 15%. Yeah, and I was recently, like 2 months ago, working with a German automotive supplier. They have 148,000 employees, and they were radically cutting costs in their core and differentiating areas. And this may be easier, yeah, but this is the recipe for disaster, because you absolutely thereby make sure that your organization has no future anymore. The sales guys won't be able to sell anymore because there is nothing that differentiates you. And what you should be doing instead is cut costs in your non-core areas, the 80%.
No, it's fine. It's just a thing that I'm attending, but I'm on mute.
Oh,
You know,
please
he's not
put
on
yourself
mute.
on mute. You're actually not on mute. So cut costs in the 80%, but keep investing at least somewhat in the core areas, and certainly keep investing in the differentiating areas, because these are the 2 to 5% that really differentiate you. You want to continue investing here. Next question is, where do you apply standards? And SAP is, as a major ERP powerhouse, of course, a great example for standardization. And what you buy from SAP and similar standard enterprise software vendors is you buy a piece of software, but even more importantly, you buy the processes that come with it, the standard HR, the standard procurement, the standard finance, the standard forecasting processes. And you want to implement those with actually no changes at all. The problem and why SAP implementation often take ages, because we believe we have to tailor it to our operating model, but this is a fundamental misunderstanding. In areas where we cannot differentiate, we have to standardize and align to best practice in order to save costs, in order to enable a fast SAP implementation. Now, artificial intelligence is the opposite. It's clearly not a standard software. And therefore, you want to use artificial intelligence to strengthen your differentiation. Now, you could be applying artificial intelligence as well to cut costs. And this may eventually save you two FTEs, or if you really find a big case, 200 FTEs. But I think it will be tough to standardize sufficiently to really make that difference. But more importantly, just by saving costs, you will never, ever be able to overtake the competition. So artificial intelligence, clearly, you have to apply it to strengthen your differentiation. This goes wrong currently. I mean, only last year or 1.5 years ago, I was leading the first AI hackathon of Microsoft and OpenAI, and corporates around the world were struggling to identify where should they be applying artificial intelligence. And here is the high-level answer. Similarly, you could use this framework to think about where you should outsource or insource. And you want to outsource, of course, in the non-core areas, because if you don't differentiate, well, then give it to somebody who does this better than you and hopefully at cheaper costs. But on the opposite, you want to clearly insource your core and differentiating areas. And the ability to drive change is probably the core element that organizations need to cater for and to build for. And this is where you should be innovating. This is where you should be insourcing to drive value and differentiation. And that means often that you should be insourcing IT capabilities, which many companies wrongly outsource. Now, next is where you should be innovating. And basically, if you make a portfolio analysis, and we did so last year with a major bank, they were running 300 innovation initiatives with funding above $250K. And we found that nearly 2/3 of the innovation initiatives were in their non-core areas. Now, of course, this may yield incremental improvements, but it by definition can't and won't define the future of the organization. So you want to clearly innovate to strengthen your differentiation. You could similarly overlay your business model on top of the non-core, core, and differentiating areas. And non-core is the operating model and the cost model and the performance model. This is non-core typically, unless you're Amazon and you want to ship super fast. Then the operating model may be a source of differentiation. But for 90% of the companies out there, operating model is all about standards. To differentiate, you need to innovate your service and value model. This holds by far the greatest potential. And Douglas will shortly talk you through how to effectively do so. The revenue model and the experience model, particularly the revenue model, often has surprising, so how we do pricing in short, often yields surprising ways of building competitive advantage as well. So don't neglect those two. So assuming we agree thus far that you have to differentiate your organization in non-core, core, and differentiating areas, then you need to consider, well, how on earth do we do so? And there are 3 ways of doing so. The easiest model is leveraging a capability model. And here you see a high-level capability model. Basically, think of just go in and have a workshop with your peers and consider the different areas, and immediately you will be able to identify, well, what is non-core, core, and differentiating actually in our organization? And just speaking about myself at Digital Leadership, well, we are clearly differentiating with our proprietary knowledge and IP. And today, well, we're sharing some of that with you. this is what we are differentiating with. So if I ask myself the question, where should I put my bets on? Well, to differentiate, I will clearly innovate to and leverage artificial intelligence to strengthen this differentiation I have today. Now, basically, this presentation comes in 3 parts. This was part 1. We briefly discussed the growing need for change. I just took you through why most initiatives fail, the 3 horizons of growth, that it is incredibly important to set yourself up for the right structure, for the right team, etc. And last but not least, that piece of strategy execution. Yeah, we basically have a short intermittent Q&A. What are your questions? Douglas and I are very happy to answer those. Feel free to post them in the chat or unmute yourself, but please put the camera as well on if you are asking questions.
So Stefan, this has been really, really interesting, and I actually have a truckload of questions, but I'm sure I'm going to be limited in terms of time. But I think the first question for me is, so if you look at the 3 horizons that you cover, if a business, for example, has limited resources, how should they decide which horizon to invest in first? How do you make that differentiation?
That's a good one. We'll talk later about it too. If you have, I mean, you always have limited resources. So that's the challenge. Typically, organizational leaders always come to me. Yeah? So we have limited resources, which is true. So the question then becomes, how can you increase your resources? And this goes back to this framework here. Where should we be cutting costs? Yeah? And you clearly cut costs here in the non-core, because most organizations have limited resources. So the idea is standardize and radically cut costs, consider outsourcing in the non-core to increase your firepower to start with. And then there is a question whether, so once you have done that, then the question is, should you go more for transformation or more for innovation? And basically, if your organization still is doing strong, so if you see tremendous growth opportunities where you are today, then bank on these, yeah, and go with them after transformation. Innovation is higher risk, so you want to leverage innovation when you basically run out of near-term or short-term opportunities that you could be building on. Yeah, that's in short.
I think Marilyn's another observation just on the back of that question is it's also at what stage a company is. And so, for example, if you take a agentic AI startup, which is the latest evolution of AI, and they have a very high scaling rate in the short to medium term, that's their core business. They don't really need to go and innovate at this particular point. So versus a big bank or a big insurer, they are, clearly they're big oil tankers. And what we've seen is that, globally, 84% of executives tend to focus on Horizon 1, and that's a missed opportunity in terms of the Horizon 2 transformation, Horizon 3. So it's a very dynamic view of portfolio theory that's relevant to each business and where their stage of growth is. What the risk is that if you're a business that fails, where your growth is tapering off, and you fail to look at key transformation opportunities or even innovation, you could be one of those statistics where your business model could actually go out of business in a realistic period of time. So it's very much around the life cycle and the stage of where your business is that affects that.
So when you take that question, Douglas, and you think about the voices in a business, right? There's the existing business, and there are these areas that could be your differentiating areas. And often you find that the non-core assets, there is a lot that needs to be fixed for today, right? Just to be able to sometimes kind of keep the engine going. Does it mean that the differentiating areas that you then want to spend your energy and time on this needs to almost sit separate from the non-core and maybe even some of the core areas in order to be able to make sure that where you want to spend your resources in terms of innovation in those areas, that there is enough support so that that area doesn't get drowned out, because sometimes what you have is there's so much noise in the system to kind of fix what's broken that often you don't spend enough time thinking about the differentiating areas. I don't know whether I've articulated that question well enough to make sure that there's enough oxygen in the business for the innovation.
Yeah, absolutely right here. So this is what the 3 horizons of growth are actually all about. As we have seen, as you step into horizon 2 and 3, everything radically changes. Therefore, can you have it in the same business unit with the same people in the same approaches? No, that doesn't work. So basically that framework has organizational consequences. So here we talk about the ambidextrous organization, and you want to clearly have it in a different team that is potentially outside again of the core business, to not be hampered by the guys who are merely working and improving the current business. So clearly you want to differentiate and put that in a different place of your business.
And Marilyn, just in my experience, and I was with a big US multinational late last year who had spun off an innovation business, and even with that separation, they really struggled because the core business was just so powerful, and the short-term metrics of driving 12-month performance was still so powerful. And so again, this is really tough things that not many corporates get it right in terms of the setup, the separate KPIs, performance management side of things. So it's definitely something that is still lacking in terms of actually getting it right. Where the organizations get it right, and there are a few, it is exceptionally powerful. But and this is why we're super excited about these frameworks, is that if you actually stick to the formula, which is tried and tested through experience, it really does improve your chances of success in innovation and potentially that differentiation.
So as to add on to that, a brief war story. I was once working with Allianz, which is, I think, the second biggest insurer globally. And I was speaking with their CEO, and he said to me, "Yeah, Stefan, job well done. I was working on an innovation initiative. You seem to be making very good progress, but don't come back to us unless you have at least 10,000 customers, because we'll crush you with our processes, with our weight, our expense structure, etc." So again and again, clearly put your innovation somewhere else or it will be crushed, as the CEO of Allianz said to me.
Okay, I think those are really, really good examples for us to be able to put, I think, these concepts into a practical kind of framework. Ursula, I see your hand is up.
I think you're on mute yet. Can you unmute yourself?
Yeah. Apologies for that. Do you have a recent case study of an organization, specifically in the insurance industry, where they've applied Horizon 3? Where they've radically innovated, that we can maybe research, see how they went about doing that, and what were the benefits and the rewards of that?
So
Is there any case studies out there?
I remember at Zurich Insurance, they were going after micro insurances 2-3 years ago, which should be well documented. And micro insurances were insurances that could be enabled just for a day. So no, I'm going helicopter skiing, that kind of scenario, to be able to insure for that. So there were specific micro insurances which you could enable just for a trip, these kind of scenarios. And they were clearly going after that in Horizon 3. And they launched a series of micro insurances for different purposes. And I'm sure you find the documentation out there. If not, feel free to connect on LinkedIn.
And maybe in the banking industry, Stefan? Maybe in the banking industry, probably? or maybe any organization in the customer service environment. Now I'm going past insurance.
Yeah, so if we talk about banking, I mean, I was in charge of the digital transformation of BNP Paribas, which is the fourth largest bank globally. So I was heading that exercise across Europe. Yeah. And the profound problem the banks, I guess, are facing out there is that nobody's going anymore to their branches. Yeah. So,
Yes.
and in terms of time spent, it's 400 to 1. Yeah. So the average person is spending 400 minutes on average online, yeah, with their bank, because everybody goes out there and checks their current account twice per week and makes a few transfers. But on average in Europe, people spend a single minute per year in direct contact with their bank. A single minute, that's all. Yeah. So the question then becomes, how can we transfer and enable sales online? Yeah, which is the key strategic question for banks. Yeah. And how can we actually close our branches? But we can only close our branches once we have managed to bring our customers online and enabled online sales. Now, for that specifically in Europe, we have launched Hello Bank, which is a bank for the young generation. Yeah? So that is a massive transformative exercise or even radical innovation, because that was a mobile first bank and a digital first bank that where we entirely resolved the entire product spectrum. So have a look at Hello Bank, for example, in Europe, but this is by far not the only case study. It's just one that I was heading by chance. Yeah.
That helps a lot. Thanks.
Sure. I think also just in terms of, I know Marilyn mentioned the Carry app, which I was, part of a wonderful team. And if I'm not mistaken, some of my ex-team members are actually on this call. But that was something where we built what we called an outside-in innovation team. And did we get it all right? No. Had I met Stefan many years before I did that, I think I would have did it differently, just learning from him. So we've got a wonderful case study in Carry and where we achieved success, but it was definitely around an outside in versus an inside out team view, innovation setup. But as I said, we also made fundamental things that we could have done a lot better in that. But it was a wonderful success. So there's a localized example of this in South Africa.
Douglas, if I can just ask you if you just to, because I'm struggling to get I'm sure I'm writing the name incorrectly. If you can just put the correct name in the chat for me.
I'll put the website in for you. It's not a problem at all.
Okay. One last question. A lot of organizations are doing digital transformation programs right now, right? And there's a lot of pros and cons about what the right approach is. And one of the things that I'm battling with is, what is the role of human capital in all of this? How do they fit into this bigger scheme of digital transformation? Is there a part for them to play in, or are they excluded from the whole digital transformation programs?
And I would like to talk about that question later. Is that okay? Because I'll bring up some slides later on in the discussion. Are there any other important questions before Douglas is going to take us through the exciting domain of business model engineering?
Happy to proceed, Stefan. We can always pick up the rest sort of later in the presentation.
So Douglas, business model engineering.
Thank you, Stefan. This very topic was a key topic that Stefan and I spent during COVID debating and working on, and it was a wonderful time when we were going back to it was in essence going back to school to learn again and relearn. But here you see in front of you is really just a Osterwalder's business model canvas format. I think what Stefan, myself, and the team did was we really gave it a lot more impetus and detail and substance to it. And as with anything in life, is that the heartbeat of any business is its core value proposition, and everything that supports that. So in a nutshell, what you have here is your value model, that what your clients experience and how they experience it on the right hand side. On the left hand side, you have your operating model of how you deliver, how does everything work behind the scenes, and then importantly how you charge and how your costs are there. So it's a very basic view of a model. And I think what we wanted to do was really to look at it more holistically. And so we created an extended version of this model here, which you can see. And this is something quite profound. And I actually tested this last night on a senior executive of a big global food brand, a breakfast cereal brand. And I actually read his website and the various data points, and I was able to stitch together using this framework exactly what this company stood for and why they were so successful. But in a nutshell, what it does is it really surrounds a more holistic view of that core business model, and that it looks at the core drivers. What is the intention? What is the massive transformational purpose? Then looking deeply into the customers, and a philosophy which Stefan over the years has really educated me on is jobs to be done, which is around, what are the key pain points that we're solving for customers in understanding deep human psychology. Clearly looking at the team and the culture, which we'll talk about a little bit later. How does that unlock this business model? And all of these incongruent together create what we call unfair advantage. And so this is the most important thing in business as we face enormous competition, substitutes, etc., is how do we continue to have unfair advantage in what we go to the market with, and how we target our customers and evolve this on a consistent basis. So this canvas is enormously powerful, and something that I think Stefan and I are very proud of with the whole team, that really allows you to have a very unique view of any particular business. And on one page, you can literally, once you've completed this, you can literally understand any particular business model and its potential for success or failure. Just moving back, clearly at the heartbeat of this is the value model, and this is something which is a more detailed view of a value proposition model. I actually had the pleasure of doing this last year with two founders who had a very ambitious goal of uplifting teachers on the continent of Africa. And so when we started the journey together, we really used this framework in terms of the this whole jobs to be done philosophy. What is the pain point that we're solving for? But appreciating what is it that we're going to be giving them, what product or service, what are the feature functionality, what are the things that compete in their minds, and then their belief systems and the decision making, and how do we change that? How do we change the inertia in that? So this framework is tried and tested. It is a phenomenal framework that allows you to really unpack the depth of your value proposition. And guys, don't misunderstand, is that I think a lot of times we buy things and it's our subconscious that is so powerful that rules our decision making. I still remember the study that was done, Stefan, that you shared with me around McDonald's, when folks in the morning would go and get milkshakes, and people were wondering why, and it was quite popular at McDonald's drive-through, and it was very simple. People wanted to have something, A, that lasted, B, that wouldn't mess on their work clothes, that would embarrass them at work, and C, that was convenient. Now, clearly the logical thing to do for McDonald's would have been to sell health smoothies, but clearly that didn't go that wasn't in line with their brand. But that just shows you that sometimes we do things and we buy things with deep, emotional needs. This moves, clearly this can help us in how we look at the elevator pitch. And again, a really neat technique in terms of how do you articulate your value proposition in a very succinct manner. And again, do take this format, practice it with your own value proposition, and see how do you fare in that. The business model doesn't live in isolation, and so the other thing that we looked at was to say, well, there's this reality of a contextual environment, and we know this contextual environment is changing at a pace in some instances that we can't keep up with. So we co-created this as a team, this contextual environmental canvas. And clearly there's things that are more near to us in terms of our customers, our competitors, our substitutes, etc. But we started to really look at it from two particular areas, both emerging trends and disruptive forces, and started to analyze these. And all those years ago, Stefan, under technology, it was good that we had AI right up there as number one. Maybe we had some vision back then, but this is a very useful approach to really looking at opportunity spaces as well as threats that could particularly impact your business model as you go forward. The one thing that I think what we've all realized in life is that we are experiencing the same products. Take, for example, music. We're experiencing music and we enjoy music as we did all those years ago, but it's the way that we're experiencing it. And that's where business model innovation is super powerful. It's changing the way we experience the same products. And we're not seeing as many product innovators versus business model innovators, and hence why we're super passionate about business model innovation. And it's an area that is definitely underutilized in business. What brings this to life clearly is the ability to execute. And so a big part of this canvas is that operating model, which you would have seen in those earlier slides on the left-hand side. And this brings together two key streams. How do we bring together, how do we deliver the value proposition? And I won't take you through those areas. And then secondly, what are the things that support that delivery in terms of the supporting infrastructure, people, supplies, etc., etc. This is a very good canvas and an approach for disciplined execution of one strategy. And so definitely worth considering as you go through that detailed phase, because a plan is only as good as a plan unless you can execute on it. So moving on, I think from our perspective, business models is not just one static view of the world. There is so many integrated views that one has to look at, both internally, externally, in a comprehensive way. And I think we're very excited about these Unite models that are available, and it's the largest set of innovation models worldwide. But to be successful in business model thought leadership, one has to have an integrated view. And so again, this just demonstrates the power of the interlinkages of that. So I've done a bit of a crash course, probably 2 years worth of work in a couple of minutes there. And so I want to talk a little bit more about business model innovation. And so once you understand your core business model, how do you innovate from there? And for us, this is where the exciting piece comes in, is around really starting with one area of your particular business model and innovating. And what we did was, as a team, we collectively looked at a pattern analysis, and we defined a pattern analysis of patterns that exist within each and every one of these particular areas. A lot of what we all know is as Stefan mentioned earlier, was really around revenue and how we price. Take Nespresso, for example. We know that's bait and hook, where you get a relatively cheap product up front, but you pay exorbitantly for the pods, and I'm guilty of that as I enjoy my coffee. But I think that's one. But what we wanted to do was really to look at patterns that exist in not only the value model and the revenue model, but in all of these particular areas. And so we created a pattern library that we've and is illustrated here. This took a tremendous amount of time and debate between Stefan and myself over that infamous COVID period. And for us, it's enormously exciting. So what we've done is we've actually broken it down into each aspect of the business model canvas and the patterns that sit within that. Clearly, it's about starting off with one particular area, as I said, and then the key, and what we've seen in our analysis, is that very successful companies are very good at the combination of patterns that they use. And so it becomes a what if scenario to say, what if we could look at the world differently through this? And I know recently, Stefan, you were involved in a telco project where there was a focus on the value model and things like try before you buy, or ease of use, or demand driven. These were just some of the areas that you looked at in terms of that particular project and iterated and innovated around. And so this becomes enormously exciting and empowering. And again, you won't be able to read that, but it's certainly available to you afterwards, is we've given you the detail around each and every one of those areas, just to give you a brief explanation of what each of those patterns relate to. This is a first in world view of pattern analysis for business model innovation. And so for us, this is something we're very excited about in terms of the innovation journey. It is a tool that's not used widely, and that can unlock significant value in an organization. And it's one that can be applied in a startup, it can be applied in a big corporate. Is no limitation as to where we can use this type of thought leadership. So that brings us to another Q&A, and again, following a crash course on business model thinking, business model canvases, and that contextual landscape. And open the floor. Hopefully, there's some challenging questions for us. We really enjoy that.
Are there any questions from the floor? So Douglas, I have one for you. I found the book that Stefan wrote with the team fascinating, with all these models in it, and maybe also for everyone on the call, and maybe you can talk us through that a little bit.
Can you hear me, Mr. Villegas?
Can you please mute yourself? If maybe you can talk us through that in the end, but these models are fascinating to spend time on, to work your way through them. And I mean, you've really tried to give us a crash course in a couple of minutes. But if there's one thing that you would like people to take away about how they think about business models, right? What would the one thing be that you think would be the X factor in terms of how to reshape our thinking around business models and reimagining our business models?
It's I think thanks for that nice challenging question, Roland. For me, it probably comes down to that what is that uniqueness that you're looking for? What's that differentiation, and how could a business model really make a difference in that particular space? And I think that non-core, core, and differentiating is also applicable in terms of one's business model. Yes, you can optimize costs in your operating model if your business is operating focused, but it really does come down to where you are in your three horizon thinking, and then linking that to the areas of the business model, because certain areas focus on horizon 1, 2, and 3. So linking, if there's one thing, is to link your three horizon thinking to where you should focus your business model innovation. So as I said, in core, if you're just managing the core and you want to manage costs, the operating model would be a key focus and the patterns within that. While if you want to innovate a brand new business model, it would be the value model and the service model. So it's linking, and in the book we do spend quite a bit of time linking the three horizon thinking to how do we use this in business model innovation, and specifically the areas that define those various horizons. Stefan, I don't know if there's anything else you want to add to that.
Well, I think what we talked through is a fundamental shift in how you innovate a business model. And in the past, we like to believe that innovation is a piece of art, that it perhaps takes somewhat of an artist, somebody particularly smart or insightful, to change a business model. And oops, that is, I mean, you could go about that approach, but it doesn't yield good results. And instead, what we advocate for is to view business models as a set of patterns. And 95% of all innovations out there is normally not a totally new thing, but it's simply a recombination of patterns. Tesla or Amazon or Apple or whatever, all of those firms, they haven't reinvented entirely the game. They've simply recombined existing patterns, and you can do so in a very structured way. And that is what we basically would like to share with that. So don't reinvent the game by simply being particularly smart about it, but by using a very structured approach. We have a pricing challenge to be resolved, for example. Simply go through the list. How business price has been invented since thousands of years. It's very unlikely you'll find a new way of pricing in there. It's simply, this has been done, guys. So use those patterns and then simply go about, hey, do we go about broker pricing or cash up front or flat rate? Make your life easy. So this is a new tool which allows you to shortcut and dramatically increase your chances of success. And organizations out there don't understand it because these patterns have never existed before. And business model innovation is the most important but least leveraged source of innovation. It's least leveraged because until Douglas explained it to you guys, most likely you haven't read about it in a book. Yeah? And it's most important because it's so tremendously easy to put yourself on a totally new track without having to be an artist or a genius. Yeah? So we really invite you to use those tools.
And actually, these tools are really, really powerful. I mean, we have actually used not the exact same model, but I think it was more a watered down version of this type of model that was previously, I think it was a Deloitte version that they had. And I really can confirm that it works, because what it does is it focuses the mind. So now you need to go and think about value, your value model, right? How do you think about the ease of use? And I think just having these prompts almost really kind of focuses the mind, so you don't go down useless rabbit holes, because you are now given tools to work with. And I think this is such a wonderful wonderful way to think about it, to actually give you the subset of this is what's available, and these are the questions you can explore, and these are the things that have worked. And I think also what I like from your presentation, Douglas, is the combination. I mean, I'm a big fan of the business model canvas, and I love the extended one that you look at, right? Because there are so many more elements that comes to it. And we often in our business, we joke about it, where we actually, well, it's actually more than a joke. You know, we say to our sales team, create a business model canvas for your client, because if you can do that, you understand the business of your client, and you have a better way of actually being able to service the client. And so that gives us the ability to be able to put everything on a single canvas, which I think is great. And then combining it with jobs to be done, I think it's a really powerful way of kind of trying to take the many different tools and build a holistic framework out of it. Any other questions from anyone so far? Okay, Douglas, I've got a couple more, but let's save them to the end just to make sure that people can get as much as possible out of our session. Thank you.
To continue understanding your customers, and basically I have a very simple question. Where will I be going for dinner tonight? Will I be going to the nice bar or to the formal dining place? And I mean, you should be able to answer that question. I mean, you got to know me now. I've been talking probably for 20 minutes or so. But just to make sure you know me really well, here is a persona. This persona happens to be me, but persona is basically a representative of a target customer segment. Yeah? So customer segmentation is a profound business concept. We market towards customer segments. We develop our products for certain customer segments. Yeah? And we innovate towards a customer segments. So now imagine you have all the information about me, yeah? And here is some more. Yeah? Where will I be going for dinner tomorrow, for dinner tonight? Huh? And feel free to write it in the chat. Huh? I'm really excited to see your thinking. Yeah? So, but I guess you'll still find that question somewhat difficult to answer, despite you have all the information in the world about me. So let me just give you one additional piece of information. So tonight I'll be meeting with a fellow entrepreneur. He's called Mr. Blockchain of Switzerland. Yeah, we know each other since 20 years, have been working together, and by now I guess it's relatively clear these guys are going to the bar. Yeah, they want to share war stories and have a fun night out. They're probably not going to a formal dining place. This is where you take first-time customers, right? So and what just happened here is something very easy. Yeah. Basically, I've just given you one additional piece of information. Yeah, my need ultimately. My need was to meet a very old fellow friend of mine. And then suddenly where I was going to became a very easy choice. And what I want to say with this is, while customer segmentation is, in my opinion, an antiquated concept, it may work still well in established markets in Horizon 1, where you want to market to the churchgoers who go to church on a Sunday morning and you want to target that segment, say. But particularly when you're transforming or when you're innovating, that concept doesn't work anymore. You have to segment by what customers want and not by whatever psychographic, demographic, or behavioral data you have. All of this data doesn't help you. With all of this data, you couldn't answer where I would be going, but simply giving you the need I have has allowed you to make that analysis and choice. And I want to share a little case story here. So this is how the wine selection looks in the supermarket next door. And say I'm going to invite you for dinner at my place tonight, yeah? And I'll be cooking pasta with clams, say, yeah? So what kind of bottle of wine are you bringing? Are you going to bring the Chateau Garibaldi 2017 or a Lafite, perhaps, yeah, from 2014, and or any of those? Yeah, we see here a Santa Cristina or Pata Negra. Like what wine would match what I'm going to cook? And again, by far, most people find it struggling to answer that question, and it's tough. Yeah? This is the logic the supermarket gives us. They're sorting wines by country and by prices. And only 2% of the world's population are wine aficionados. 2%. Only 2% are comfortable with that. Yeah? So what we did is we rearranged. I mean, we still had the classical wine presentation, but mostly we simply changed the way people would select wines to match their cooking. A wine that would go with a light meat, with a red meat, with a fish, or that would be the perfect wedding gift. Yeah? And this led ultimately, so we resegmented the display of wines by customer needs. And I just want to share the results with you guys. So this was done with one of the world's biggest supermarket chains. They had revenues of 60 billion. 12% out of that is alcohol, 7 billion. And we saw a 14% uplift in alcohol sales, which resulted in 1 billion new revenues by simply changing the display of wine, or put differently, by taking customer needs seriously. Now, I don't know what this could mean in your business, in your insurance business, in your banking business, in your whatever business you're operating in. But basically, we have to reconsider how we do segmentation. We have to rethink segmentation in terms of customer needs. And there is a methodology for that, which is called jobs to be done, where with statistical certainty, you can identify the important but unmet customer needs. And we believe that to be the quintessential basis for innovation. What innovators typically start today with is ideation. A recent newspaper article headline was 100 ideas for one to fly. But how do you know that this idea is actually inside the frame as opposed to outside it? Whether this idea actually meets our differentiating capabilities and leverages those strategically. And so on and so forth. So if you are ideating, you could as well be playing the lottery. What to do instead is think about and identify with a statistical relevant framework the important but unmet customer needs. And then you will be on a very good path to building the next billion-dollar revenue company. Or here as in that supermarket, build 1 billion new annual revenues in a very simple way by changing the display of wine. Digital transformation. So we talked about the business model, and basically I would like to carry you through an example. And here in that example, so we learned that the digital transformation is a step change to one part of a business model. So in this case, we're looking at a channel's innovation. So we are selling directly to the consumer online instead of offline. Yeah? So think of a bank that suddenly sells products online instead of going through its branch network, yeah? Which is an exemplary transformation. So what most companies then do is, well, they build an online store or an online bank or something like this, yeah. But if you look at what actually happens as you do this transformation, well, your customer relationships are going to change. Why? Well, the branch is no more there. Well, and suddenly we now have an online brand. Well, perhaps an online store. Well, perhaps it needs a different brand. Then, since the branch is no more there, your service model is going to change. And as we have seen, for example, from Tesla, you can't sell a super complex vehicle online with 1,000 configuration options like they do at BMW. The BMW car configurator to complete it end to end in all details takes 2 hours. Nobody's going to do this. People are overwhelmed. So you need to simplify. This is why Tesla sells their car online. It does so, but it has only a few variations you can get your car in. One is color, and then it's rather limited, yeah. But you may be able to offer a product system then to upgrade certain components or to offer complementary products. Well, what I want to share with that example is as you make that transformation, as you change one part of your business model, all other aspects of your business model change fundamentally to support that transformative effort. So the end game of digital transformation is to reconfigure your entire business model harmoniously again, so it works again smoothly. And this is where innovation is very much comparable to transformation. So a transformation you take outside of the house, similar to an innovation effort. You make that transformation on a sheet of paper, first of all. Then you test it in reality, and you test it end to end by reconfiguring everything harmoniously. And once you have figured out the perfect formula, how your business model transformation in effect works out in practice, once you've validated it, you bring it back to the core enterprise for an effort of change management. And I think Ursula raised the question earlier, like, what does this mean in terms of our workforce? Yeah. And so innovation transformation, they're similar. You first of all take it outside of the house. So it takes a small team to figure this out, how a business model and an operating model are working after the transformation, yeah, to configure that harmoniously. The big change in terms of workforce comes when you do the change management effort, when you bring back that intended change and that upgraded business model, operating model back to your core enterprise. So here you look at workforce planning, you look at capabilities, you look at training, etc., as part of that change management effort. That is the core component that is often missed out on a workforce level. So yeah, that's what we just learned. Everything changes as you transform, so reconfigure harmoniously. In terms of portfolio allocation, we talked about those 3 horizons of growth earlier. And then the question is, well, how much do we actually need to be changing? And if the market change here at the bottom axis is low, yeah, then our level of organizational change can be low as well. This is where you are in Horizon 1 and where you conduct continuous improvement in small steps. If the market change is, however, bigger, then you need a transformation, and normally a digital transformation. So here your organizational level of change is much more significant if the market changes. However, if the market is changing radically, and this is what we experience in many industries, as Douglas pointed out at the beginning, then you need to develop fundamental changes, yeah, and you do so with innovation. And basically, if you now overlay that picture with some exemplary companies, the biggest 10 companies in the world, they are in the meantime all tech companies. They are driving market changes with technology innovation. They're investing massively. Now, if we contrast that to other players, so in my own country, there is Volkswagen, which used to be the second biggest car company in the world, yeah? Not even talking about the American ones. And they went slower, they evolved much slower than good parts of the market. And I remember a meeting with one of the bosses of Volkswagen 5 years or so ago. And he had one single question he wanted to discuss with me that day. That question was, we have 748,000 employees, dear Stefan. What do we do with them? And I think Volkswagen hasn't answered that question. Yeah. And 5 years later, basically, we are now standing there and are seeing mass layoffs in the country where I'm coming from Germany. Similarly, most banks, they evolve far slower than the market. They are experiencing heavy market changes, but they're adapting slowly. Similarly, retail abroad is a sector that is evolving slower than the market. And you want to avoid being in the red zone. Being in the red zone means you're slower than the market. You want to stay in the green zone. You want to evolve faster. Otherwise, you're setting yourself up for disruption and for failure. So based on that, how should the portfolio allocation look like? So the default recommendation is, well, you invest 70% of your change budget as an organization in Horizon 1 to incrementally improve. You invest 20% in transformative efforts, and you invest 10% in radical innovation. Now, that is the default portfolio allocation, but how should it really look like inside your organization? And actually, there is a very simple guideline, and that is, if you're experiencing in your Horizon 1 great growth opportunities, if your margins are high for years to come, yeah, then simply stay in Horizon 1. Focus everything on Horizon 1, or at least most of your change budget. However, if you see that your offering is getting commoditized, and one symptom of that is that your margins are shrinking, that you're more comparable, that your revenue growth is slowing down, well, then you need to more radically allocate to Horizon 2 and 3. And this is profoundly where we see most organizations are at. And if you look at, again, like, why do those big leading companies, why are they up there? And what they do differently as compared to most banks and Volkswagen and retail organizations, etc. Well, what they do is they invest 10 to 20 to even 25% of their annual revenues into innovation. This is why they are leading. They're building entirely new markets. And the average large conglomerate is only investing 2% of their annual revenues in innovation. And this is why they are slowing. This is why they're trailing behind and are at the risk of disruption. This is what we can see in those types of organizations down there. So culture, eat strategy for breakfast. I think that is another highly exciting domain. I know you're passionate about this, Douglas. Would you like to share what it really is?
Yeah, thanks. I think, Stephen, it's an old analogy that says culture trumps strategy, but it's absolutely true. And I think I've experienced that not only in my career, but in companies where you could actually see the difference. And again, that big food manufacturer and distributor that I met last night, you could get the sense of of how the executive leadership leads from the front and what a difference it makes. So there's absolutely no doubt about that. Just moving on, Stefan, to the next slide, if you could. I think this was something that we would normally be excited about, was to say how do we look at culture on one particular canvas, and in the center of that is mindset, and then everything that goes around that in terms of purpose and meaning and leading and decision making, and clearly there's a culture in a Horizon 1, but there's also a uniqueness of a culture that you need to inculcate in a Horizon 3 innovation space. And so for us, we were very excited working with a great team of experts in this field in putting this together. I think don't underestimate what's in that bottom right-hand quadrant, is sometimes we've got to let go. in terms of, things that are history in our culture that actually is not relevant for the future that we face. But we actually used this on numerous client opportunities. And when we plotted this, there was a direct correlation to the extended business model canvas and that unfair advantage and ultimately long-term sustainable performance. There's direct correlations. You can absolutely, and I challenge the audience out there is to, if you get some time, just think about your own organizations or other competitors and to look at, what is the uniqueness of their business model using the extended business model canvas, and what is their culture, and do you see a correlation? We certainly see a correlation in this particular space, and it is one that can never be underestimated as you invest time and effort in inculcating this culture. And clearly, culture is also led from the top in terms of what the leadership stands for. So this is enormously powerful. It's something that and it's not just limited to an organization. You can use it, your culture within your own team environment that you're part of, that you're responsible for in your own business unit. You can create your own uniqueness in terms of using this particular format very, very successfully. So it's not limited to that. I think the other thing is we see this, this uniqueness of culture in startups that are very successful, where there's strong elements of grit and determination and resilience of founders and the team that support them. I've had the pleasure of engaging with, industries that you would think are actually stagnant. I'm dealing with a recruitment agency now, which does about 250 million rand turnover a year. And the thing that differentiates them is their culture. That's what makes them different. And from that, the innovation that sits within their teams in the front line and how they're empowered. So this is something that is enormously powerful and exciting to unleash in your business, and certainly does trump one's strategy and strategy execution. Just moving on. Thanks, Stefan. So yeah, I think I know we've also got scheduled 10 minutes left, but we have a pause opportunity here to just look at this, and I really love the simplicity of the wine example. I think sometimes we try to overcomplicate things, and yes, digital is an important part of our life, but it's not the savior to innovation. I think it's just an enabler. And so for me, that's a wonderful example, Stefan, of sometimes in life it's just about keeping things simple in terms of customer needs, and likewise that whole difference in digital transformation and how it affects using business model canvas thinking, and clearly the portfolio allocation again, and finishing off with culture. So to the team out there, if there's any questions, we're happy to field them now. Otherwise, we've got just a little bit left to go to finish, and we could also pick those up at the end.
I see we've got one
There's
question.
a hand up. Yeah. We've got a hand up.
Yes. Hi, good morning.
Good morning.
This is a great session. I wanted to ask a few questions. Like at the first presentation, we said we often buy, say, like the vendor softwares like your SAPs and so on for the processes that they offer. But most often you find that there's that 80-20 rule, right? Whereby it will meet maybe 80% of your needs, and then the other 20 is not necessarily catered for. So the one question I have there is, how would one cater for such an instance, or the 20% that is not necessarily catered for? And even in terms of when you go into the market, the value proposition that one would have had, or the business value model, how would you get into a place of saying, this is now how I can accommodate or still bring the value that I intend to bring to my customer with this lack of 20% that I have now identified, and even completely avoiding the trap of trying to customize those enterprise solutions, which will now make you forfeit any of the other enhancements that the particular vendor might be bringing in the future, because it makes it difficult to keep with the maintenance of those applications. Thanks.
So that question goes back to what we originally discussed, and that's basically the SAP scenario, right? And SAP will typically cater for the default processes very well. Now, there could be situations where it doesn't. And I think this is the question which you're raising, the 20% that the SAP, as an example, doesn't cater for. So what do you do in those situations? And my first question is, like, what are those 20%? Are those 20% that you're missing really adding to your differentiation? And assuming they are missing, that they are adding to your differentiation, well, then the answer is obvious. Deploy your own IT teams and do custom in-house development to strengthen this differentiating aspect. If it is core, well, similarly, either you then build it in-house or you seek help from another software to fill that gap. Now, assuming it's really non-core and it doesn't differentiate, then I would raise the question, are those 20% really needed? And assuming it is really needed, well, then I guess you're back to vendor selection. And then the question becomes, well, from which vendor could we buy those 20% as well? Now, assuming you still don't find a vendor who fulfills those last 20% in your non-core areas, but they're really required, well, then you're back to the drawing board. And I guess you must develop them in some way in-house. This is how I would view that. Did that answer this question? Did I manage to answer this question?
Yeah, it does, but still leaves the complexity because I guess there's no one right solution. The other challenge that I've seen is the lack of partnership between business and the IT when they are taking whatever transformation journey. So there has not been that synergy, so to say, because most often a business will take or lead the discussion in terms of which solution or technology. And then now it's a matter of the IT just rolling it out. So such things, they can also distort the full realization of the value. But thanks.
I think that's a great observation, and I've seen it before where, we call it the tail wags the dog, and unfortunately, and it's in most cases, big organizations do get this right, but when they don't, it's where there's misalignment between what really differentiates the client experience and then what is the technology that's required to enable that. And clearly the folks who look after the clients and the relationships and the segmentation and the value proposition, the key is to make sure that they are aligned to their technology partners so that the customer voice is strong, specifically in the area of differentiation. And when you don't have that, then unfortunately you have the environment where technology then drives it, which shouldn't necessarily, it should be harmonious in terms of having equal voices in that. But I've certainly experienced it where if there's one dominant voice, it can slant it the wrong way and you don't actually achieve the investment in the right areas. The other thing I've also noticed is that, and we've seen it worldwide in these infamous reorganizations that just about all corporates are going through, is that, again, coming back to those three areas of non-core, core, and differentiating, is when you go across the board and when you start to impact teams and people that are customer facing, that the customers value, but you cut costs there, that's where you're starting to cut into your differentiating, which really does not make sense. So again, the importance of those three, that framework that Stefan spoke about earlier, is key critical. And I have seen organizations where they just get it wrong. And here in the UK, the big banks are doing that right now across the board, which just doesn't make sense. So it's not a local issue, it's a global issue. I know there was Ursula, you also had a question, and I know around techniques or tools that we could use to understand what customer needs, and customer segmentation capability. And I know this is a topic, Stefan, with jobs to be done, but also in terms of segmentation, you did a lot of work with customers. So maybe just a very high level view from yourself.
So how do you go after segmentation? And I think I proposed to think about the important but unmet customer needs. And the important thing to understand is that those fundamental underlying needs are not changing, which is great news. So, and just one example, for example, all of us, we travel to work, and many of us, perhaps we take public transport. So 100 years ago, we would use the newspaper to entertain ourselves on that journey. Today, we're using the iPhone and looking through the news, etc. in there, and we may in addition be listening to music. But the fundamental need behind that hasn't changed. As we go to work and as we sit on the train, well, we must find, we're looking perhaps to inform ourselves. That may be an important but unmet customer need, or to be entertained. And then we can always ask people, is that an important need of yourself? That's the first question. And the second one, are you happy? To what degree is that fundamental need met today? And if it's not met, yeah, I don't know how to entertain myself as I go to work, well, then you have an opportunity here. So basically, you can break down any process in more details to uncover those needs, yeah, and then measure to what degree is it met today. And perhaps one slightly longer example is, for a global fertilizer organization, we looked into what it takes to be successful in the business of farming. And we looked at that in a number of Asian markets, the biggest market being India. In India, there are 500 million farmers. And we looked at that very big need, what it takes to be successful in the business of farming. And we looked at the season. Yeah. So I need to select certain crops. I need to plant the crops. I need to sow them. I need to take care of the crop as it slowly grows. I need to water it to take care of anything that could go wrong with pests and whatnot, till I do the harvest, and then I need to sell the harvest. So these are the underlying needs. Then you can go even below and measure at each point. So is there enough water? Is there too much water? Isn't even? And then you can say, hey, is that a problem? The watering system, is that need fundamentally met with that farmer? And through that big pyramid, yeah, we investigated all needs that these farmers in India were having. Yeah? Then we looked at what is really a problem. Is it water? No, it wasn't water. Is it pests? No, it isn't pests. The biggest problem they had was in selecting the right crops that would yield enough potential and to make a good market in the end. Yeah, this is what they have been missing out on, a strategic analysis as to which crops to sow to start with. And if that is a problem, well, then you know exactly where do you innovate. And this is what we did with this fertilizer company, to invent solutions to help the farmers in India to select the right crops. Was one area where we had several ideas, which we then launched into the market. I don't know what it could mean for your insurance or banking business, but basically there is a very structured approach, and then you can measure it with statistical significance by simply asking, well, we interviewed at the end through a research institute 500 farmers, and therefore we exactly knew what pain point they were having. Does this make sense in a nutshell? There is a ton of downloads on that topic, and it's described as well in our book. If you have questions about these, well, feel free to write to Douglas or me and connect on LinkedIn.
Fantastic. Stefan, thank you very much for that. Douglas, are there any final sort of thoughts on your presentation that you would like to share? We've sort of run out of time a little bit. And I know some people are pressed for time, but maybe talk to us about the book a little bit as well, because I think that really is the powerful piece for me as well.
No, thanks, Marilyn. And again, I think when you're so passionate about a topic, the time does fly when you're having fun. Yeah, I think for us, as I said, the book was always about giving back to the world, to make the world a better place, and that's what bound us as a team of hundreds of professionals and led by Stefan is really that. And we wanted to give back to the world, and not just to corporates, but to startups, to consultants, to mid-sized businesses. And so for us, it's a passion and a dream to give back proven models and approaches and thought leadership that enhances your chances of success in growing your business and sustaining the business, whether that's through transformation or innovation, and the various aspects of that. I know we didn't get to talk about leadership models and things like that, as that's evolved, but to the audience out there, feel free to order it on Amazon and online on Stefan's company website. You can get access to all the models. They are open source there. But it is really that passion to make the world a better place, and to see businesses and families and communities more successful. And it's just been enormously positive received. I had a very senior executive, the deputy global chairman of Deloitte, turn around to me when we gave him the book, and he said, "Douglas," and I've read it, and it's like a futuristic MBA, and I think that's what it is, but with a strong flavor of really having the best proven methodologies and approaches and experiences from a great community of people that put together. But Stefan, just your closing remarks on your side.
We talked about the role of risk, and that innovation is high risk, and 90% of all corporate innovation initiatives ultimately fail, and similarly 90% of all startup innovations ultimately fail. And I just don't want to live in a world where that happens. I believe if we leverage the right approaches, they are well documented and understood, and we have shared a ton of these today in a very fast pace. I think we can double and triple our chances of success. And if we do really well, I think 1 out of 2 innovation efforts can become successful. And I think this is what we stand for. And if you employ those models and you know what you're doing, then this is what you can be doing. And this is what Douglas and I are standing for. Feel free to connect with us on LinkedIn. Feel free to evolve us into your efforts. And well, thank you so much for having us today. It was a pleasure to be able to share.
Fantastic. Stefan, thank you very much. Douglas, thank you very much. I'm very excited to say that we are going to be using your book as part of our Agile Leadership Program. We think it's an amazing book, a wonderful structure, wonderful tools. And so we're very, very excited to be using the book as a core textbook as part of our Agile Leadership Program. But to everyone who's attended today, there are loads of questions. I think Stefan and Douglas, what this indicates is we may need to have a second session at some point, as I've just learned so much from it. So thank you very much for your time. Thank you for making yourselves available, and thank you for sharing. It really makes a difference when we can get just a different perspective. And the one thing that I'm walking away from this is is that 5% at the end. If I think about the different models and how we need to spend more time on that. So thank you to everyone who's participated. Please give Verity some feedback on the session, and maybe what else would you like to get out of a similar session? And maybe the leadership model is the next one that we tackled that we didn't get to today. So thank you very much, Stefan and Douglas. We really appreciate it.
Thanks, Marilyn. Thanks to everybody.
Thank you so much.
Thank you, guys.